And then you have JPMorgan came out, blew out the numbers, expected. We're going to see that from every bank. There's so much money flooded into the system. There's so much spending. So you're going to see a lot of these banks beat and maybe pull back a little bit because they've been outperforming the market, which is, kind of normal. If you're running up strong into the market, even if you report numbers that are great, you might see a little bit of a pullback. And then gradually over the next couple of weeks, you see it, start rising again. That's been the trend for the past few years. But instead of looking at these numbers, this is why I tell everyone you have to listen to the conference calls. If you don't have time to listen to conference calls, you could buy services like Fly on the Wall, Briefing.com, where they'll provide bullets for you, right? So I will get bullets of every single company and what the CEO is saying. That's relevant across all industries, especially what Jamie Dimon has to say outside of what he's saying about Bitcoin, which is a market he clearly doesn't understand or why people are buying it. But consumer credit card spending up a lot, expected. Supply chain issues he believes are going to end soon, which I'm surprised to hear because they are not a supply chain company. I don't know if he's looking at the same data I'm looking at. I don't know if he's seeing Apple and all the supply, like Bloomberg came out, I think, with Apple lowering their iPhone demand because not demand, but just supply chain issues, right? So production, they're lowering their production. And just that was Bloomberg saying it. I don't think Apple came out and said it, but I saw about 4 or 5 sell-side firms lower their numbers on the component makers. Okay, we're talking about the largest ones at the parts that go into the iPhones, which is Skyworks, Broadcom, Texas Instruments. So they are all struggling to deliver their components for the Apple phone, right? The new phone, 13. So you're seeing that, but Jamie Dimon says, hey, it's not a big deal, but he's not really. He hears from these companies. I'm listening to these companies too. They're coming out publicly and they're saying, yeah, you listen to every CEO, they all have supply chain issues. I think it's going to last through 2022 and even longer. I hope he's right, but I don't agree with it there. But another comment that he said, and this is why it's important, you're not just listening to that conference call for just JPMorgan because I want to buy it or sell it. It's listening of how you can get ideas. And he said M&A is going to remain active, which tells me it's a very, very strong market. That's when you see M&A. And credit losses, they didn't say low. Credit losses, very low. That's what you have to consider. We're taking on loads of debt. There's a lot of companies out there, and everybody talks about debt. It doesn't matter how much debt we have, as crazy as that sounds, as long as we're able to pay it. And if you're not able to pay it, that's when you'll see things go haywire in the bond market, credit default swaps. You'll see it. But when you see credit losses very low, means most businesses are still doing very, very good, and they're not concerned for now. Maybe that changes in a quarter from now. Maybe we see higher inflation and raw material prices really, really take off. But for now, to me, I was surprised that they used the word very, very low. That was a big deal.
Yeah, it is a big deal, and it's good to see from an investor and just a consumer standpoint. The bullet point he did say, and we're looking at briefing here, Frank, is he doubts he will be talking about supply chain issues in a year. So we got to give him some slack there. Maybe it's a year from this quarter, which is a lot. And
I thought he said next year,
Well, I'm just saying it says in a year, but
yeah,
that could give, that's like the Fed, you can move the goalpost on that.
Mm-hmm.
That's good in the sense of, hey, they do have they have a great pulse on the economy, right? They're the biggest bank by assets for consumers and all that kind of stuff. So you would think that, they have their ear to the railroad, so to speak. And that's encouraging. They get a lot of boost from, trading and all that kind of stuff. So yeah, overall people are healthy. Like you said, there's a lot of cash floating around and sloshing around the system, which is good. Consumers are strong. The Apple news that, I don't know if you have that Bloomberg article up, but I think you're right. They cut production by like 10 million phones or something. How is that not the bottom? Apple is the biggest, best, one of the most recognizable brands. They can control markets. They are influencers. They are leaders. If they're finally starting to get hit by supply chains, we have to be much closer to a bottom than not, right, Frank? I mean, if you're affecting Apple, what the hell else is there?
I mean, I would think so. And I have that article, Apple set to cut iPhone production goal due to chip crunch. So, just they're talking about the suppliers. But I don't know. I mean, with Apple, you could say it's the bottom, but I could tell you, if you listen to CEOs of the car companies that were lying through their teeth, which they were lying through their teeth, because if I'm seeing the data, they're seeing the data. And there was a lot of data, a lot of good reports, industry reports, telling them how bad it was. And all you had to do is go to try to buy a car, and you saw how bad it was. So they thought it was a bottom in Q2. Not even close.
Right.
Yeah. Now we're in Q3. We're seeing the numbers continue to go low. Q4, those numbers are being brought down even further. So I don't know if I'm with you on that one, where I could say this has to be the bottom because it's Apple. What I do know is we do not have a lot of fabs, right? We have basically Samsung and you have Taiwan Semi. And those companies make most of the chips. Intel has a few fabs as well, but try to get out of that business. And there's capacity. There's certain capacity. And that capacity is 100% maxed out. So it's very difficult, even for the autos who have like a real-time supply management thing, when they'll see demand and then go to those companies, Taiwan Semi, they get their chips and say, hey, we need them. And unfortunately, it was too late because a lot of that capacity was taken up by Apple and other components, use it in tons of electronics, right? So autos got screwed. But it takes 5 years to build a fab plant. 5 years. Okay, you're not going to do it before that. Maybe, 3, 4, whatever. But until these things are built, I cannot see, with the demand that we're seeing right now, I have no idea how these guys think they are going to just solve this problem. I mean, unless demand comes down tremendously. But there's huge demand right now. It's going to be even stronger demand. That's what I'm saying. With infrastructure, if that bill passes, it's going to be even more demand. But just with the supply issues, if it's chips, if it's raw materials, I don't see this unclogging anytime soon, especially in the chip industry, because you're at full capacity. It's not like, hey, we're at 70%. It's like the airlines. We got 50%, and all of a sudden corporate travel comes back. They have the planes available. They'll get them out there. But how are you going to expand that? How do you make more chips when you don't have enough room to make chips? So that's an interesting thing to me when you see these new fab plants. I think Taiwan Semi's opening up one in Arizona. They're starting to open up in the U.S. We'll see how this plays out. But the good news is we're talking about it. Everybody knows about it. Everybody's warning about it. And usually when you see that, it's starting to get priced into the markets. That's the good news. I just think that it could be a little bit longer. And to be clear, this is a temporary problem. Doesn't mean it could temporary in 3 months, 6 months, 9 months. Yep. But they're going to solve this and be much, much stronger on the way out. But you just don't want to buy a company if this is going to be, or a stock if it's going to drag out, because you're going to be down 20, 30% before you know it, before you see the market roar back.
Yes. And I didn't mean that it was the bottom today, but yeah, you're right. We'll see how long this lasts. But my point is that, man, if it's finally affecting Apple, the big juggernaut, the optimist in me says, hey, that's a good thing. And hopefully, yeah, but another quarter or two, I mean, that's the new normal. People are just going to have to get used to higher shipping costs, longer wait times, et cetera, et cetera. So that's, it is what it is. And like you said, we'll get through it. And these are quote unquote temporary. You just gotta. We're like the Fed here and moving our goalposts. It might be It might be a quarter. It might be 2 quarters.
It could be
next
2
year.
quarters. Transitory. Everything's okay.